Missed the prompt. Introduce ourselves.
Yes. So it's introduce ourselves, your background in real estate investing, and an interesting fact about yourself.
Okay, cool. So my name's Eric. I am a beginner investor, I suppose. I have a home that I became an accidental landlord for, and like in the process of renting it out to strangers for the first time. I've always been interested uh, in trying this out, so I'm here to learn. Um, I guess one random fact about myself: I've been on America's Got Talent as a contestant.
Wow. For what talent?
Um, Diablo, it's like juggling.
Cool.
Yeah,
That's awesome.
gladly not on TV.
Nice. That's a cool fact. All right. Next up, we have Gene. Gene Ao.
Hello, guys. My name is Gene O, and I'm a realtor for the last 10 years. And I do both commercial and residential. Been in the Bay for a longest time. And real estate wise, I've always been in real estate. My parents always been in real estate since I can remember. And I'm continuing that tradition, I guess, the investing. And no, it's been fun. And random facts. I have like too many kids. That's all.
All right. Excellent. 3 and maybe 4. Okay. So next up, we've got John Chan from New York.
Hey guys, can you hear me?
Yeah.
Okay. My name is John. I have been in real estate since '08. I primarily buy residential and some multifamily in Ohio and New York. And what else did you guys want to know? I'm sorry, I joined it a little bit late.
No problem. Your real estate experience and interesting fact about yourself.
Interesting fact. To be honest, I can't think of anything too interesting. I'm a new parent. It's like the most wonderful thing in the world I can think of.
Awesome. Congrats.
Thanks.
1.5 years old.
Yeah, 1.5 years old.
All right. We've got Michelle next. Do we have a Michelle Brackett on the line? Okay. Let's move on for now to Spencer.
Hey everyone, Spencer Sue. I am a Bay Area realtor myself. I used to work in software sales for over a decade. Had a good start so far, about 21 million over the last year. And investment-wise, I own a few single family in the Bay Area. I also passively invest in syndications for apartments and storage out of state. And fun fact, I am just driving from playing a very hot round of golf. So it's very warm out there.
Nice. Golf is one of those that hasn't really closed all the way. I think a lot of courses are actually open, huh?
All courses are open.
Yeah.
Tennis and golf are the two essential sports these days. Yeah.
Nice. Thank you for that. And next we have Yang.
Hey, yeah, so I'm Yang. I live in San Jose. I was in the call last time, but I didn't get to participate too much because I had something to do, so I was listening in. And then I had to drop off halfway. So I went back and watched the video, which was pretty cool. In terms of my experience with real estate, I'm a pretty newbie here. I have an investment property in Sacramento where I grew up in, but I think now it's a very dynamic time. So I'm happy we're having this discussion. In terms of my the hobby or something interesting, my full-time job is at Intel as a pricing manager, but on the weekends I do wedding photography. So that industry has been slammed. I haven't done any photography for the last 4 months, but can't wait to go back out there.
Awesome. We last have someone on the line who called in 646-648-0159. I don't know. We don't have a name for that.
Yeah, Sam, that's me. Ken.
Oh, Ken. All right. Thanks. All right, cool. Do you want to introduce yourself real quick, Ken?
Yeah, I'll do 10 seconds. So I'm Ken. I'm based out of New York. I've done about 16 years in technology. I was part of a startup that exited. And I'm now involved with startups. And aside from that, I'm a real estate newbie. So I am looking for an opportunity to do residential, commercial investment in the future. So I'm loving the opportunity to listen in.
Awesome. Thank you, Ken. And lastly, I'll go. My name is Sam Fong, formed Asian Investors Network to meet all of you guys and provide a platform to share these ideas, knowledge, and connect with other investors in the Asian community. My personal background is I've been investing for 15 years, around 10 years in real estate. I have interest in private equity, commercial real estate portfolio, as well as I buy properties around the San Francisco Bay Area to renovate and hold for cash flow or flip. I also I'm also doing a deal in commercial for like triple net properties and that sort of thing. So pretty well-rounded and looking forward to learn from everyone here. So with that said, let's start with a quick discussion. So that topic again is best practices and common mistakes in residential real estate investing. So how I like to do this is perhaps focusing first on some best practices, and after that, sharing some common mistakes that we can all learn from. So how we can do this is perhaps for those who are experienced in real estate investing, we can go around and share some of the practices. Like you can share your general strategy, what you generally try to accomplish in a given real estate investment, and then talk about what you found that works for you. Would anyone like to start first? Perhaps Anita or John or Spencer.
If no one wants to go, I'll go first. So I know a lot of people, there may be different investors, as in let's define it kind of separately because I think it's very important. You know, you have one end that looks at like a primary home as an investment, which in one way it is, but it should be categorized a little bit differently versus people that already have a home and they're thinking about getting their second or third. And then you have those decisions of, well, do I buy it within my same city or do I buy it, out of state? There's many options for you. And it's very important to understand the difference because on one end, if you're thinking of a primary, timing is not as critical as if you're thinking of especially like a flip, right? Because your time horizon is 6 months, a year, versus primary. Even if things go bad, you're not necessarily forced to sell it to take those, unrealized losses. And over a long period, a lot of areas, whether it's New York or Bay Area and some of these stronger markets that tend to do very well over time. So, the strategy in this case is, it's kind of interesting because, I have these conversations and they talk about, oh, market's crashing, all is breaking, all hell is breaking loose. And then you look at some of the reports that came out today, home buying demand is actually at the same levels, if not only like 1% lower than it was the same time last year. So people get kind of caught in the emotions a lot. And what's interesting that I found is typically homeowners are very quiet when it comes to this. And likely if there is a downturn, it's the homeowners will buy their second and third and fourth home because they have substantial equity, but they also understand the market more. And the people that tend to try to time a market are the ones that don't actually own a home, they're actually renting. So it's kind of an interesting thing of just kind of a mindset than anything else. And then when you're thinking about the second home, then there's lots of options for you, right? And, I'll let someone else talk for now, but if it goes back around to me, I'll give you my thoughts of like out-of-state rentals, what my process would be and what it is to identify that. So those are my thoughts.
Great, thank you for that, Spencer. Anyone else want to chime in?
Hey guys, I guess I'll go because I might be in and out sometimes. So yeah, I mean, I look at rentals and flips differently in terms of returns. And as for my personal residence, I don't look at that as an investment. I never bank on appreciation. It's never guaranteed. It's nice when you get it, but for my personal residence, I always think it's depreciating, losing money, negative cash flow. But as for rentals, I typically aim for, depending on the area, I currently moved to Jersey, but I primarily invest in New York City right now. And I also have rentals in Ohio, but in New York City, I would accept 7 cap or above, depending on the risk. If it's like a rent stabilized multifamily, I would need more than that. If it's a free market with some chance of appreciation, I could raise rents, free market, I might accept 7 cap minimum, maybe 6.5 if it's in an amazing great area. As for flips, New York, I used to always get like, I put 50% in, sell it. If I put 50% in, I could sell it for 100,000, in a different state. But in New York, I always find that I get about 75%, I could get 100. So, if I'm in a project for 750,000, I could get out a million. That's about what I get in these areas. Nothing crazy. But, I mean, when I was in Ohio, it was a different time. In Cincinnati, it was a different time. It was 08, so 09, 10, 11, 12. That's when I was buying. I would go in for 20,000, I'd be out for 100, multiple times. But, we live in different times now. Right now I'm selling a few things, and I'm seeing that the market really, I don't think it's as bad as a lot of people say. I mean, my rent collection is 9% plus. In addition to that, I work with my tenants, no late fees for now. Obviously, you can't evict if you wanted to anyway, but I work with them, and I'm putting things for sale, and I'm getting a lot of interest, and I'm getting full price offers. I think it's like there's not much inventory out there, and I'm getting a lot of interest and a lot of full price offers. So I don't think the market is weak right now at all. So that's just my 2 cents.
Thanks, John. That is very interesting. So your rent collections are above 90%, you said?
Yes, they're above 90%. Actually, I got all my rent collections in Ohio. I have like 10 or 11 units in Ohio. And here I have about 11 or 12 units here in New York City. I personally live right across the bridge in Jersey. To be honest, I was just tired of living in like 800 square foot spaces in New York and Jersey. I have 1,500 square foot as a 2-bedroom. It's amazing. You don't see that in New York.
Way more
but,
space.
Yeah, I mean, our rent collection is 90% plus.
Awesome. So for me, I have an interest in a portfolio of multifamily properties, and we are also seeing above 9% rent collection. So maybe it's a experience across the country.
I always feel like the rent collection. I mean, most people are collecting unemployment, and I know some of my tenants, they're not employed right now, but they're collecting unemployment. Some of them collect more than what they did at their jobs. So I don't see how you can't pay rent. Most people.
I think, yeah, I agree. I think it's a question of how long that will last, right? Because you're right. The short term, I mean, there's so much stimulus. People are getting more money. That's why they're not even wanting to go back to work. And
Exactly.
I don't know, and maybe you guys know, like, how long is that period of unemployment? Because then after that, then it may be, interesting to see.
John, would you know what kind of professions the demographic of your tenants work in?
I have teachers, middle income, teachers. If I have like students, I have some guarantors. Yeah, but I have a pretty mixed demographic. Teachers, principals, nurses. I have a lot of everybody, but middle income, nothing rich. Some high income, middle high, some middle. That's it.
Okay. No, I asked because like this pandemic has definitely affected certain professions more, and others have kind of benefited from not having to like go out in some respects. So I wonder how that pays into like the 90%, 90+% rent collection. But that was just something that crossed my mind. I didn't mean to like interrupt this chain.
Can you also share?
So to answer somebody's question, there was a question of how long the unemployment benefits will last, right? My understanding is, especially in the New York State in particular, we're looking at July when these extended unemployment benefits continue until they run out or they don't pass with a bill that covers basic living expenses. So maybe this is yet to play out. You might have to see how things play out in July.
Right.
There's a lot of thought that Q2 will be a time of more pain than Q1. Obviously, it hit America the hardest, or people were in the biggest panic around like March, maybe early April. But there seems to be some sort of consensus building that Q2 will see more pain. So what do you guys think about that? And in terms of like rent collection, in terms of pricing, do you think there'll be more opportunities? Do you think the market's going to stay flat in strong areas, or how do you see this all playing out?
It feels like there's going to be a cliff sometime, right? Like once the unemployment benefits run out and people have to go back out there either to return back to their job or to look for a new job, that's when I think a big chunk of those people are going to realize, oh crap, I can't find a job, right? If they can't go back to the job they previously had. And now maybe the unemployment benefits are kind of defaulted back to the previous unemployment benefits. They may not have enough to continue living the way they were. So I feel like right now the markets are being just held up, right, temporarily. But I don't know when that cliff would be. Q3, Q4, I don't know. Right now, I'm reading articles too. Like I'm seeing the same things. Like there's, they even coined it like a bidding war in certain parts of the of this region or in other parts of America. But it still feels really counterintuitive to me. So I still feel like there's a cliff.
Certainly, we see that in stocks where the prices have recovered significantly. Does anyone have a bearish view of real estate in the upcoming 6 months or so? Like, does anyone think that prices will actually drop significantly and there will be good opportunities?
I think office space, I'm guessing, I don't know my numbers, but I'm looking at news, man, crazy. Everybody's, all the big companies in the Bay Area, everybody's working from home now, and a lot of big leases are terminated.
WeWork got slaughtered so hard, but we saw that coming, right?
Well, let me ask a very basic question then. So if we accept that commercial real estate will go through a winter, which it looks like by most indications it is, especially with the work from home trend. How does that affect residential real estate? How do you think that plays out?
I think that there's definitely going to be a migration out towards the outside of the city areas. I think my anticipation is like probably around that hour travel time. You know, with the rise of work from home, I don't think that, you know, I don't think that there'll be obviously not a total elimination of office spaces. I think that there will probably be that like 2 to 3 day of work, and people still want to be in that vicinity, and certainly companies might downsize perhaps and keep people in rotation, but I think for now they probably will keep the spaces because they need more space, right? Because it was open office, everyone was in close quarters, and then now they need to multiply basically a square footage per person, right? To maybe about like, I don't know, 3 times per person, going back into the closed office space model. But I think likely they will probably move out towards suburbs. And a lot of my colleagues have been seeing things picked up pretty quickly on like things in Marin, things that are like a little bit outside the city center where there's more space, more room for family, better, and that kind of thing.
So in other words, you're saying density, demand for dense commercial space because you can get more quote unquote workers in the same amount of space, sharing the space, so to speak, hoteling as they call it in consulting speak. But then with residential, there will be a dispersion and more demand for you know, being within the radius of the urban area, but not necessarily the center.
Radius, but yeah, larger spaces in general, and likely more like single family or individualized units.
So have you seen that play out in terms of demand? You said there.
One interesting trend could be that people realize they're paying too much for small spaces, and they move out of the city.
Sorry, Sam. I was just finishing a question.
Oh, sorry. I think my is unstable or something.
Okay. Well, I just didn't want to dominate the conversation, but I did have that follow-up question though.
Sure.
You said you had anecdotal evidence that was occurring already, Anita?
Yeah, yes, it is. Yeah, things that are, my colleagues that work outside of city in Marin, Vacaville, sort of these other areas are getting their units sold just as quick as they were before, and whereas SF has stalled a little bit of a lot. So the luxury market is definitely stalling, taking lots of time. You know, I was just sending over to Sam this $9 million house that dropped to $4 million, which was hilarious.
Wow. Wow.
So
that's dramatic.
Yeah, it's crazy, but everything, some things that are outside the city are getting picked up within a week, and things like that. Cash buy, you can see, you know, open house, stuff like that related. Mm-hmm.
I'll add to that too. Yeah, I would agree to that. But I would also comment, the interesting thing is, if you look at some of the denser cities, there had been a lot of support from the city to make it that dense to begin with. So whether it's incentives for developers, and you know, you look at like San Francisco's skylines. I mean, there's so many new condos coming out, and they're quite nice. But then you look at the surrounding areas, whether it's Marin, San Mateo County, Santa Clara County. For the most part, construction is very limited. It's very limited. It's not nearly as dense. So it'll be interesting to see, like, if San Francisco's market does really have a huge exodus, but then what happens with the neighboring one, because they also can't take in that many people. Like, if everyone in SF wanted to move out, prices will jump a lot because it's nowhere nearly as dense as San Francisco. So it'll be interesting to see for sure.
Yeah, and perhaps that term, the great equalizer, perhaps might be more, you know, might pertain to SF real estate. You know, it's luxury markets are coming down, but affordable housing and the politicians will definitely be pushing up for all that. So there might be some of that evening out.
Can I start a new topic?
Yeah. So I think my internet is dying in and out. Sorry about that, guys. One question I have is, what strategy are you guys pursuing now that you know, it's a very rapidly evolving time? What do you think is a good strategy to pursue right now if you were to invest in residential or multifamily? Or are you holding off?
I guess everybody's quiet. I don't think there's anything to do right now, quite frankly. It just depends on where you're at. If you own properties, you know, if you know things go up, you still get the benefit that your property went up. If things went down, then you have the opportunity to buy more property. But I think there's just so much stimulus that I don't think people are grasping yet how much stimulus is really here versus like look at how much stimulus was in 2008 and what that did over a 10-year period. So there's this, on one hand you have the bad economic data from a unemployment perspective. On the other hand, you have all-time highs. You know, in your case, your rent payments are still coming. So it's just like it just kind of balances out, interesting enough, because of the external forces. So there's not much to do, at least in the next quarter, I think.
Yeah, I agree with that. I feel like it's a waiting game right now. There's just so much risk. So I feel like the downside risk is definitely heavier than the upside risk. So what's happening for me is you know, I'm trying to save up for my next home, and so from that perspective, I'm not trying to like time the market. I'm just trying to find something I like, and then, you know, if it fits the bill, go for it. But I think from an investment perspective, I would probably just hold off right now. Even if you get, I feel like even if you get like a decent deal, you just don't know if the rents might even come down. I've heard stories about how landlords are starting to cut rent just to help out with you know, making compromises with the tenants so that they could get paid. But, you know, who knows after all of this, once everyone reemerges from their homes, what that would look like. So I think just holding on to cash right now, probably what I would do if I had cash to invest.
I think you bring up a good point about the rent collection. And I think that's a good discussion topic too. What kind of strategies are you pursuing to collect those rents, especially if you have multiple doors? What are you doing to keep your tenants happy? And as we all know, the eviction process is extremely long right now, and you can't get an eviction even if you wanted to. So what kind of steps are you taking to make sure that your tenants are happy and able to pay?
I say mainly just don't piss them off, right? I think the law is on their side right now. And the last thing you want is to push them to the point where, you know, you break that relationship and they sit in your house for a few months and they bounce. But I also think it's very important to create some kind of a compromise or a plan, at least to get them to pay, you know, assuming you have at least a month or two of deposit for the rent, you know, if you know, push comes to shove. But making a plan, maybe like doing, you know, 30% every other week or something like that, just to get them to pay a little bit, so to reduce your pain as we kind of near the end of this shelter in place or moratorium suspension. So
can I hear the answer from John Chan if he has any idea, like shares his experience and how to mitigate eviction or non-payment, because you have a lot of rental properties.
Sure. Yeah, so I'm always buying and selling. But as of yesterday in New York City, they just reopened the courts for existing evictions that was already ongoing before pre-COVID. There's still no new filings for evictions, but they just opened it. So, you know, I had evictions going on before for some of my flips. But how do I mitigate the risk? So for rent, I don't own any rent stabilized, but for my friends who do own rent stabilized in New York City, they're not really all that worried because these tenants are living in undervalued, you know, a few $100s, $1,000 apartments, and they're never going to be out of there. Because if they did, the landlords would be very happy. My friends would be very happy because their properties are worth more. You know, there's always ways to increase rent despite the laws. They can combine apartments at a new rent stabilized rent. But they will love it if those rent stabilized tenants got out, but that's not happening. So I don't think that rent stabilized tenants are ever gonna give up their lease by not paying whatever, you know, good deal they have. So I don't think it's too much of a worry for rent stabilized. For free market, I do think after the courts open up, there's going to be a huge bottleneck. It's inevitable because, you know, and I think, you know, when the Fed stop the, you know, the stimulus, I don't know if they're all going to give more stimulus or not, but when they stop this, they're going to have to scramble to find jobs. I don't think there's anything you can do. There's, in the free market economy, there's definitely going to be a lot of evictions coming up. I don't, but, you know, for me personally, I have guarantors on some of my leases. You know, if they're like, say, a student, a musician, I have guarantors from the higher income, from whether they're parents or whatever it is, you know, make sure they have, my criteria is 80 times the rent for the guarantor. And, you know, I would think they would have savings, those guarantors. So that's the only way I can think of.
Thanks for sharing. That's great. Good to know. And also, as far as what Spencer said about amount of money is being printed, I'm also worried about that because it's like 5 months and you printed already like $5 trillion, which is ridiculous. But anyway, as far as answering Sam's original topic, what to invest, how about I open a topic about ADUs. Like, how about that? If you have some money cash around and your prices are like, your price of your home equity is already there, what about a refi, cash out refi? Since the rates are so low, if you're able to cash out refi through ADU, what are some of people's experience about that? How about that?
Go for it.
When you say ADU, are you talking about like an extension to your current home, or is like a standalone unit, say in the backyard or the driveway or somewhere in your lot?
Accessory dwelling units. It's pretty hot in California. I'm not sure about New York, but just this year it's loosened up like quite a bit. All the regulations loosen up like a lot. For example, it used to, like January 1st of this year, cities where I live in, they require parking requirements, and this year they loosened up to say, you know, you can do whatever you want. We don't even care about parking anymore.
I think it expanded in popularity in recent times because of the housing affordability issues that states like California has been experiencing.
I just thought somebody would have experience in that, but if not,
I'll
like to
add
talk
to
about.
that. Yeah, let me maybe
Sure.
comment. So this is Spencer, because I actually partner with a general contractor for 2 years now related to that, because we were initially very bullish as well. The challenge is this: you have these incentives, you know, and it's great for sure from the city and making it easier and easier from a law perspective. The issue is not law perspective. The issue is cost. Like labor will continue to increase, and it has been increasing still today. So I think people may want to do it, but there's very little financing, number one, for obviously other than HELOC if they choose to do so. Number two, it's a lot more than people would expect to pay and want to pay for it, right? I mean, think about like a 700 square foot in-law unit. That's going to cost at least $250,000. So you have this aspect where the labor is the biggest problem. And even if you have a factory out, there are prefabs, the cost is still the same. And so the systemic problem is going to be cost and labor. And now with, obviously what's been happening over the years with Trump and immigration, you can't get illegal, it's very hard to have illegal workers as an example. So unless there's a huge inflow of people that want to do construction, while the trend will continue to increase, but it may not be nearly as fast or as positive as one may hope.
Yeah, I agree with you. Go ahead, Sam.
That brings up a good point in that how do we control for those, how are you combating those rising labor costs? I know it's happening all over the country, it's not just California. We're seeing that in our commercial portfolios too. The cost of labor is just rising, and there is a lack of people wanting to go into those fields. So we see that trend continuing in larger portfolios as well. But
on my end, in California, Bay Area, on my end, the labor actually has been cheaper because they really want work. I got my guys, they really want work, and I get pretty good deals at the moment. So that's just personal. ADU-wise, yes, costs. The prefabs are those are just jokes. Like I've been calling them off the hook, and none of them are cheap. They said prefab's supposed to be cheaper, and it's a joke. And unless you do a HELOC or a refi, there's no real financing for those. At least I haven't found any yet. So that's my experience with that. And I would like to move on to the next topic if no one wants to talk about the ADUs.
But Gene, what's prefab?
Okay. Prefabricated houses. So there's a lot of these companies, they have these boxes like tiny home concept and stuff like that, which is all great, but two problems, right? One, like we talk about, cost is like, it's still expensive. It makes no sense. Unless you're building like actual big, like 3,000 or more square feet homes, then you can cut costs by prefabricating a section of the house and drop ship it. That I see a cost saving. But if you're just doing like a 800, 700 square feet home in the backyard, it's going to cost you 200 grand. Even the crappiest looking prefab, like, it's 200 grand. So it doesn't make, my guys can go out there and do like 120,000 and go front and ground up for cheap. I mean, I did one for 100 grand. It was pretty cheap. Anyway, the second problem, what was the second problem? Oh, like people show a lot of those tiny homes and stuff like that. If you connect that, if you try to go to the city and say like, oh, I'm going to just drop ship this tiny home on wheels, they're not built to spec. They're just waste of time. The most cities will just throw the case out like, hey, you know what? You guys actually have to build a home, not a mobile home in the backyard, and it's illegal to actually rent it out most of the time for single family zonings. So it's just a dream. A lot of people talk. Yeah, it's I don't do it. I tried actually. I didn't do it. I didn't continue anymore. Can I go on next topic?
Go for it, Jim.
No one's. Okay, so how last year? Wait, this year? Whatever. California had like rent control, right? Like statewide rent control. Have anybody experienced and see the effect of rent control so far in California? Damn. Or any ideas of what the effect could be in the long run?
I think it makes it harder to evict, obviously. And in cities that are pretty zealous, I'm just staying away, like San Francisco and Oakland. But I think it just adds a layer of protection for tenants. And if we work within the guidelines, there's still opportunities on the table. I think some of these cities are already more stringent than the statewide protections that were passed for California. I know that in New York, they recently passed pretty sweeping rent control conditions too. I think Q4 of last year, if I'm not mistaken.
Yeah, June of last year, they passed the Tenant Protection Act and basically limited a lot of the upside for rent stabilized properties. You know, before pre-2019, there was a lot of ways to increase the rent. For example, you get a tenant out, you automatically have 20% added on to the rent stabilized rent. And once you reach a certain amount, it becomes destabilized. So 2,700 was the destabilization amount at one point. Now they removed that. So you can never destabilize an apartment right now. So before that, apartments were selling for there were 4 caps. Now, you know, since you have no upside, it was 4 caps with upside, so they would get them to the 7 caps. But now, since you don't have any upside, you have to sell for minimum 7 cap. I actually don't see too many rent stabilized properties even trading. Honestly, they're not even closing. I've known of people who actually walked away from a $10 million deposit on a group of buildings in the Bronx because they thought that was better to walk away than to actually close on the transaction.
Wow. Really eliminated the incentives for developers and landlords.
Yeah, the cap rates, it was crazy. The rent price, the building prices dropped, depending on how much upside there was, anywhere from 20%, 30 or 40% even, depending on the upside.
That's great insight. That's a great story. Thanks for sharing, John. Oh.
Gene, why don't you discuss your strategy with flipping and also cash flowing properties?
I do flips. Wait, can you hear me? Can you hear me? Oh, yep. There you go. Yeah, cash flowing. So yeah, I'm working on just the ADU. I'm working on ADU in the back of my house. That's it. Another one. Pretty simple, straightforward, and just another avenue of rent. So I think it's pretty good, and I'm capitalizing on cheap interest rates. It's the best.
Where do you live, Gene?
I don't know. Fremont. Well, I mean, my investment's in Fremont. Yeah.
You guys do, are you guys allowed Airbnbs there?
Yeah. Yes, you can. I am not sure. I don't do Airbnb, but I'm not sure if you can do it with ADU. Yeah. And Airbnb is dead. Like, my friends all collapsed.
You mean for COVID, it's dead, but like if tourism comes back, it may be alive, you mean?
Yeah, I mean, I would go for it if tourism comes back, specific areas. I mean, if that's the case, I would buy in specific area and go on Airbnb. It makes money.
Gene, so what are your friends doing? You say your friends who got slammed by COVID with Airbnbs. So,
yes. So Airbnb friends, yeah. So they can't do it. There's no booking. They just have to. So they don't even own the house, right? So they just rent and then they do Airbnb, and now they just have to. Good thing, like, you know, there's no you can break the lease now. So the law actually works for them. So they just took it out. So they can't pay for it and they ran out.
Oh, so they rent.
But then there are other.
They rent and then Airbnb the rental.
Right. So they. Well, if the landlord is, okay with that, then they don't care. It's all money. Money talks. So they make a lot of money last couple of years. So it's a good operation. But an other friend, he actually owns them, and I see his house on the market. So, so it's gone. Yeah. So
I think specific locations are still performing. The locations that are more suitable for travel, like Mammoth Bay, Discovery Bay, these like picturesque destinations that are more interesting. My cousin owns a portfolio of Airbnb properties located across California, Nevada, Hawaii, and his properties are still seeing demand. So I think it's just in which pockets still make sense. For the Bay Area, a lot of places used to work before COVID, but in select cities it just doesn't work. Like you're better off doing way less work, getting a long-term rental.
Are there? I was going to ask. Are there? There are loan forbearance programs, right? But do they apply to rentals and investment properties as well? Like, is that what's keeping these guys from defaulting or foreclosing or selling their homes, the investment homes?
I think so. Yeah, I think you can have forbearance on any type of mortgage, which I highly do not suggest you do it. So,
I mean, basically, you get extra time to pay it, but you still have to pay it. That's my understanding.
Right.
Well, you're kind of in the bad, like you're on the record basically after that. Like my lender friends all tell me the same thing. Like, if you don't have to, don't touch it. It's like a friend of mine who did a short sale back in the days, and everybody's doing short sale. He's like, what could happen? It's like a couple years later, it'll be clear off. No, for like 7+ years, he couldn't get good loans or good rates or even get accepted in regular loans. So don't touch it. Yeah.
Yeah.
So I want to talk about another topic if no one's going to talk about forbearance or any other previous topics. So looking forward, what is a good city, out of state, of course, to invest in? Or in your state, if you're already living there, like, I have a great city. What is a good city to invest in, and why? And why? Yeah.
Out of state, Gene's referring to out of California. Does anyone invest outside of California and New York?
Any takers like Texas or Nevada or?
I do have some investments in Las Vegas, which have been, I have some on the Strip right now, which is struggling a little bit. So I can't say that it has been doing really well in the previous, I think I've had it for at least 6 or 7 years. I have 2 units on the Strip, unit, a 5-bedroom outside as well. And all were bought super cheap. I actually have bought multiple properties in Las Vegas without even looking at it before, because they're probably around like 150, and it just, it's like, that's fine. But I paid the price for that one. I definitely did. I had this really I had a really good story about buying blind and in a new city that you've never really done before. Long story short, some homeless people, while I was going through escrow, broke into one of my units in Las Vegas and changed the lock. So they find your unit while I was going through escrow online, and then they changed the lock on you. So you can't even get back into your own unit. So when we called the cops and the cops discovered that there was someone that, someone else that's not supposed to be there, there is, the unit was already cleaned, already ready to go. And then, after they took it over, it was just filthy. There was needles everywhere and everything like that. So lessons learned for your investors. I mean, be there, or people who get creative on on how to occupy your property. So, and I'm sure a lot of landlords have a lot of interesting stories.
I think I could beat you on that. I mean, I just recently bought a family, and it was the previous owner was an older gentleman in Brooklyn, and he put it up for sale. It was vacant, and this criminal, he's like an intelligent criminal. He kind of knows the law. He reads up on the law, and New York being a very tenant protective state, the guy literally just broke into one of the apartments, changed the locks, moved in his family to the second, different apartment. He found another tenant for the third apartment. It just, he occupied the whole thing. So then the owner is coming by, and in New York, the law is really that if you can prove that you've been in there for more than 30 days, or you can produce like a utility bill, then they cannot get you for trespassing and kick you out. They have to actually evict you. Eviction takes a long time. So they could not get him out. And the neighbor was actually a cop. He's not doing anything. He's a retired cop, but yeah, they basically broke in and they set up tenancy. And there's nothing, the homeowner lost his house to foreclosure. I actually bought it, and I gave him cash to leave. I gave all the tenants cash to leave. But the only reason he accepted my offer because he was already in trouble with the law. He was in trouble with the IRS. The police actually came there, and I don't know how he beat them, but the police let him stay. They took him into the courthouse, and he sued the NYPD for $100 million. He lost the case. He didn't win $100 million. But they broke the glass, and the NYPD broke the glass, got in because he wouldn't open the door. And yeah, this is the fifth house he did it to, too. He told my neighbor, who was NYPD, who was a retired cop. He didn't know he was a retired cop when he told him, but yeah. So my neighbor told me that this is the fifth house he did it to. He's a professional tenant. He gets into houses. He knows how to set it up so that the cops cannot kick him out for trespassing. You just got to produce a bill. You got to do, and in the meantime, while he's living, he can't pay his utility. He doesn't have money to pay utilities, so he set it up illegally by somehow stealing electric. And then the tenant who he moved in, it wasn't paying him because they found out he's not the owner. So he can't do anything. He's not the owner. He can't evict anybody. So yeah, he was in a bad spot. He needed money, and I gave him money, and he finally moved out. He was a PO. He's a piece.
To do it somewhere else.
It's a hot potato.
That's not even the worst. I have really bad stories. I don't know. I could spend an hour telling you bad stories. But
watch out for this guy.
Can he even go to jail for that?
I've seen a lot of people breaking and entering, and I've seen it like live. Like you can call it a cop, but they're professional squatters in New York because the tenant laws are such that you got to evict them. Police don't even want to deal with it. They don't want the bad press. Breaking and entering, you got to catch them in the move. If they see that you have your sofa and your couches in there, your bed's in there, they think you're a tenant. If you can prove a fake lease, you're a tenant. Give them a fake lease. Say someone, because the argument is that the tenant got tricked. Someone took their money and gave them a lease, but then it turned out not to be. So they're trying to protect the tenants in that regard. That never happens. They don't get tricked. They just trick the property owner.
That's a crazy story. Thanks for sharing.
That's not even that crazy.
That does beat my story.
That beats most stories.
Can I ask you? Can I ask you, like, New York's tenant law seems pretty similar to California.
San
And a friend of
Francisco.
mine actually sold the house too because basically squatters in there and they can't get rid of them. 2 homes. But anyway, so with that said, with the laws in place, like, what makes you? How do you make money off? Well, obviously you make money off that by buying it like for cheap, I guess, off the guy who's in trouble.
Yeah,
Like,
I mean,
how do you invest in that kind of environment?
you really have to take calculated risk to me. So to me, I calculated that I got 3 tenants. And, before I went, I bought it in foreclosure. I always, see what the condition is, at least what it looks like from outside. I try to knock on the doors sometimes if someone's home. I just see if it's occupied, looking at the garbage cans, if it's actually garbage there, and But how do I make money? I know what it's worth. I know it was worth 1.3, 1.4, and I picked it up for 8 and change, and I had to pay people out, and it was barely minimum renovation, and it's fully stabilized today. It's producing A+ cap, 8.5, 9 cap. So I'm happy with it, and I know I can sell it for a lot. And I even got a mortgage on it. That was the crazy. I even got an inspection appraisal. Because you need to get an interior inspection. I paid people $50 each tenant. Say, can I view this? I'll give you $50 for a 10-minute viewing. And my appraiser went in. I got a home inspection. I got everything, and it was amazing. I got a mortgage on it at a super low rate. It went
Man,
smooth
you're
that time.
slick. That's
Yeah,
crazy because we couldn't get a appraisal in there because we couldn't get like inside, right? And the tenant was playing games with us all the time and couldn't do it.
Money.
And we were thinking, and I completely said, don't do anything illegal. But we were thinking about pulling all the breakers out, because that would be like the least amount of damage, and they can't stay in without breakers. They have no incentive to like fix it if you just take the breakers out. But I don't know, like,
I just paid the money. I mean, if they didn't accept 50, I'll go a little bit more. I really need this appraisal. Otherwise, I either have to pay cash or go hard money, and hard money is a lot more expensive than getting a conventional loan. And they accepted $50 a tenant, which is great. The other tenant, actually, I already paid before I closed. I paid him a lot, a few $1,000 before I closed, and he's happy with it because he really needs the money. These guys, they don't have like literally a cent to their name, man. They're just living for free. And
Why do they refuse you coming into the apartment? Why do tenants refuse that if you're trying to buy the house?
well, they're not
because it's
actually my tenants.
free.
They're not my tenants.
Right.
No, go ahead.
Oh, no, I was mentioning that they have a right to use it. I have been, and I wanted to ask you this question. It's like, how are you guys manage? Are you guys going into any of your units to manage? Because I have also dealt with difficult tenants not letting, me in to do some necessary repairs. And especially now from work from home, I have had a tenant sue me over lost use or like, and sue me over their lost income for a window repair that I asked them to come open the door for the handyman a couple times, and so they sued me for like a month or 2 of like loss of use and loss of income. Are you guys how are landlords out there managing all of this?
What did you do? I'm curious, if you don't mind. How did you respond?
I'm sorry, what was your
How
question?
did you respond to the lawsuit? Like, do you have to fight it back?
Yeah, we just reached the settlement. We just said, all right, you know what? It was in California, and a lot of times they're just like, no matter what, the tenant really going to win. So I just kind of gave them money to kind of just like, let's just settle this and move on with our day, because this is just too difficult, because they can pile on tons of different excuses, tons of different things, and it's just kind of like hearsay, right? And it can just go on. And so with all the lawyer fees, we just ended up settling, and my insurance just ended up covering it, and I had to pay a higher premium, all this kind of stuff.
Yeah, sometimes the issue is even if you're completely in the right, you still have to pay because it costs more to rectify the issue or to win.
Yeah, so I think John mentioned a little bit about that. He said he just rented a little bit cheaper than everybody else, and they will not call you. They will not mess with you if it's a little bit cheaper. They know it's $3,000 a month around here, and they're paying like 27. They're just not going to call you ever.
Well, rent stabilized, it's not like that small a difference. It's like it could be worth 2,500, 3,000, but they're paying $900 as on rent stabilized property. That's really like a realistic difference here.
Yeah, like I do like pretty deep cuts, but not to the point where it doesn't make sense anymore. But I just because the rent control, going back to rent control, I never want to increase rent, but due to rent control, I actually want to, because I don't end up like, like you said, like if it's $3,000 only paying like $500 or $900, then I don't want to be in a situation where, in that situation, but I just keep it like maybe 10% less than market. So it kind of keeps them on their toes, but like doesn't hurt them that much. So far, like I have knock on wood, I rarely have problems with tenants. Yeah, because of that. Yeah. Oh, Anita, right? So she's still here?
Yeah.
I guess not. I don't see her anymore. Yeah, I want to talk about
She's
Nevada. Yeah, I see her, but I don't see her face anymore. I want to ask about Nevada. Like, I'm personally interested in investing in Nevada, and she just said like somebody broke in and they called the cops and they're out, kind of thing. That's beautiful. Like, I love that kind of idea. Like, no rental. It's a tenants, no rent, no tenant laws, basically. Which is, I think from what I've read, Nevada is pretty good. That's why I just want to see what her experience is. So anyway, I guess move on to the next topic since she's not here.
A question for everyone while we're still on out-of-state investing. Like, what is your process for looking at a new city and getting a scope for what properties make sense to put into your portfolio, or like how the local law operates, like finding connections, etc. Like, particularly because like my house is in Seattle. I'm currently in San Francisco, and these are all I think these are difficult markets for a beginner to start in. And so, like, I guess to continue from that, I started taking a look at Pittsburgh, like just maybe a couple of weeks ago. I don't have too many details or really have a good idea of where to start, but it seems like it has possibility of having positive cash flow. So
yeah, I think a good point for out-of-state investing is there's a couple ways you can do it, right? You can either go with a turnkey management, like they'll identify the property for you, they'll do all the tenant work for you, take care of any rent collection and complaints, and then you pay them a fee. And then you hope to make a cash flow out of that. So I know some people who have done that or even own companies who do that. One of my friends is a partner in a company that basically bought up around 700 properties in the Midwest, basically doing that. But he says that at the end of the day, it's still a lot of work. He built his operation from the ground up. Basically, he has his own acquisitions people, his own property management teams out there, and all that stuff. But he says that he bought himself a ton of issues, basically, because the rents out there, specifically for Midwest, not commenting about other markets, but the rents in some of these states that have extremely low rents, you can get wiped out if you have to do something expensive like a roof repair. wiped out in terms of like your profits for that year or possibly longer. So I think it's like a risk reward scenario. You got to make sure that if you go with a turnkey management type solution, that they have a good track record and that you like the economic trends in that city and the location of the properties. I think if you were to do it yourself, probably would be beneficial to understand that local market intimately and decide whether you want to build your own team out there or partner with someone who's doing business in the area or something like that. And if you do partner with someone, how do you obtain the trust and the assurance necessary to make sure that you're not going to be shanked on that deal, basically?
How do you apply that to an absolute beginner? Like, I mean, all of you are very experienced and you're talking on a completely different level. But from the point of view of someone like me who wants to start investing in residential real estate, I guess like I fall in the category that Spencer mentioned. Like, if you're a homeowner, you know how the process works, and you're ready to buy the second and third one. Is the folks who like have never done never purchased property who kind of falter on making the first step. So, how does a beginner start with not commercial, residential real estate investing, and mainly for rent?
I think that's a great question.
Chimay, first, I was an electrical engineer too, and I also forgot all the calculation and whatever, it's out the door. So to answer your question, I think Yang has a really good strategy. I actually like his strategy. So you could talk to him in details about that. Yeah.
Okay.
Pretty good.
Yeah. I think he jumped off a call. But okay.
Oh, yeah. Who asked about how do you qualify out of state? But anyway, I want to hear. That's why. Oh, okay. I feel bad for not answering Chimay's question, but it's really detailed. That's why I would love to share with you, in details, in my opinions. And as far as out of state, since I was pretty interested in what people do. Like, first of all, I don't like out of state properties, because there's enough deals around the area, and driving back and forth is just a waste of time. Like, I don't trust other people managing my properties, really. So it will be straight up good property manager. If it's out of state, it has to be straight up good property manager with good track record, and you can't do anything with it. Just buy apartment complex and just sleep and forget about it. And hopefully you make a lot of money. And Sam was right. I see a lot of people do out of state, and for example, one guy that I know does out of state. They make $5,000 a month per property. It's cheap property. But then 3 years later, they replace the entire roof for 20 grand. So I'm like, okay, so why even bother? So yeah, forget about that. So we're going back to the original question. The reason why I asked is because I want to see what good area. I'm always appreciation kind of guy. Real estate is about appreciation, population growth, or else don't buy it, basically, in my opinion. New York's a beautiful place to purchase. Bay Area too, it's great. Just want to see what other areas people have focus in. Seattle's really good too, but I'm more still out of state, so I'm really hesitant. And also, number one thing I look at is property taxes. Definitely, will kill you if it's too high. That's why I never touched Texas so far. I don't know who else touched Texas. Sorry. Also, what's the other one? Rent control, because California is so big on that. The only reason why I would get out of California is because of rent control. I don't want to deal with renters in the long run. When I retire, my property will not be here. Close. I'm on the phone, please. Yeah. So that's why, actually, personally speaking, I like Nevada a lot, and someone invest in Nevada, and sooner or later I'll probably purchase in it.
Yeah, when Anita gets back, she can share.
Huh? Sorry?
When Inida gets back, I'm sure she'll be happy to share. But I think John wanted to cover that too.
No, to you guys who are, if you're new to real estate and you're trying to invest out of state, just keep in mind in like the lower rent areas, where $600 or $700 rent areas. It's true, I mean, replacing a central air unit or roof, costs don't, it's not going to double from one place to another. It's pretty similar. So you're still paying a $5,000 roof replacement in New York or Ohio or Florida. $600 rent, that's going to be, the roof replacement is a much bigger chunk percentage of your, just keep that in mind. I mean, to me, I own properties in Ohio. I lived there. I went there for college, and I built up a team of a lot of contractors. And before I moved out of Ohio, I had more than 10 units, but it was easier I didn't get a property manager. It was easier for me because I just knew a lot of contractors and that I built up relationships with. We traded properties even, and I would just call them up, say, hey, my plumbing or my HVAC is out, and they'll fix it, and I just send them a check. That's it. But if I had to start from the ground up, I don't think it's that easy to build. I think you have to spend some time to build those relationships, or just get a property manager. But now, then again, you have to interview a few, because not every property manager is going to be a great one. And you might not like them. And so you have to go through the process. You have to spend some time. And, it's easier when you build some scale, but if you're doing it for one property, just to get an additional 1% return out of state may not be worth it. Just because you live in an expensive California or New York expensive state. I can see the reason why investing out of state, but if it depends on the scale, in my opinion.
Well, to me, all of this is like very new. So like I wasn't necessarily looking for out of state. Like I just piggybacked on the conversation. Like initially, I would be interested in like something that is closer to home, say New Jersey. I don't know much about the New York market, and it sounds like the tenancy laws are much stronger there. So I was looking for something in New Jersey to start, get into this and learn the ropes. Like right now, even if I like happen to talk to 5 great property managers, I couldn't tell like who's better and like who's lying. To be honest, I think
where do you live?
I live in Newport, Jersey City.
Oh, Jersey City. Yeah, I didn't, because a lot of New York investors are trying to invest in New Jersey since the rent laws passed last year. And New York is a very tough place to invest, and I really don't recommend it if you're like new, because there's a lot of politics involved and a lot of regulations involved. I definitely don't recommend newbies investing in New York, but a lot of New Yorkers are going to New Jersey, and consequently, the prices are going up, or the cap rates are decreasing in New Jersey because of that. That's what I'm seeing looking in New Jersey, because I live in Jersey as well. So it doesn't make sense if I'm getting the same return in Jersey and New York. I'd rather just go to New York if I understand New York.
Okay, but how? Okay.
Chime, I think to answer your question, there's a couple routes that you can take. One is to simply buy your own property if you can afford it in a place that you think is going to appreciate, and also perhaps the debt load isn't too high, like your debt payments relative to your income. Another thing you can do if you want to make an investment in a property is to partner with someone that you trust and who has a good track record. You could say go 50-50 on something. The key there is to make sure that they can be trusted and to make sure that they have a good track record. A third route you could go is to go on one of these platforms like Fundrise and all these other syndication for multifamily properties that's been growing in popularity. I know that Chris Trong, if he's still here, no, he had to drop off. Chris Trong was investing in platforms like that, and we've had exposure to platforms like that too. The thing there is, those guys are pretty expert in multifamily apartments and other types of projects, and their deal is basically offering a platform for newer investors, or basically retail investors, to park their money in, and then they can you can earn some return. The thing is, they're pretty new in terms of these particular types of platforms. They've been around for maybe like a couple years, not that long. The partners behind them are more have more track record, but in terms of actually producing results for investors over the long run, it remains to be seen. If you're an accredited investor, your options open up a lot more. You could invest you can invest in larger deals. You can invest in syndications. You can invest in syndications as a smaller investor too. But once again, the key is track record. That's going to be the easiest way for you to evaluate an opportunity. And to evaluate track record, you could basically ask for the results. You can ask for what deals and transactions they've done in the past. You can talk to other investors who have invested with that particular manager or fund. For my firm, for example, we have around 160 managers who all have their own portfolios of properties. Our investors invest in with one of those particular managers, and we take care of those assets under management. So those are for accredited investors. As a non-accredited investor, like I said, you could partner with someone that you trust in the local area. I think that could work, but you would need to vet them carefully.
So yeah, again, like I think for me, it's like a chicken and egg problem that like I do not know anyone who's already in this area. I guess like this group is the most experienced group that I am talking to, candidly. So like in terms of like investing in like, so I have been using Fundrise for a few years now, but I wanted to like get hands-on with like buying my own property and learning the ropes. And then like when I have some experience, I guess like I can expand it and kind of get to a point where you guys like basically the things that you guys talk would make more sense to me. But I guess there's like a lot of like learning the ropes. I mean, I get it on a general level, but like I feel so distant from there that like I'm trying to figure out like how to just get involved. Like if I just go out and buy something, will it rent or not? Like the how do I find tenants? Like how do I make sure I get the good tenants? And like I don't know, just experiences, or like even if you said like there's brokers who actually find properties and help you with that because they kind of get some commission out of it or something, like what good areas are there in New York, New Jersey, where that high skilled professionals or like folks would live that would pay stable rent or something like that. So I mean, I was just looking for like pointers on like how to get started. Maybe these questions are way too naive for most of the folks over here, but like those are real things for me.
Yeah, no, that's a great point, because we're actually recording these sessions and they're going to be uploaded, so other people will benefit from these questions too. And to answer those questions, I think a good step is to do what you're doing right now, like basically absorbing this information, like what maybe some of this is overhead, but I'm sure that you're also learning a lot and getting some insights from here. So I think as you participate in these types of meetups and video chats and consume these resources, then you can get more comfort in learning, like either if you want to start doing it yourself or partner with someone. I think that would be a good way to learn. And I'm sure most of us didn't start with a ton of knowledge in real estate, but we have mentors, we have partners, and we networked with groups like this until we learned enough along the way to be successful.
Okay.
I'm sure all of us have lost money on it too. So we have expensive lessons on the way. It's better to learn without committing too much of your own capital.
Chimney, I mean, my first house I bought in Ohio, I didn't know what drywall was. I was going through with my agent, and he's like, "You got to fix the drywall." I was like, "Can you show me it? Can you show me the drywall?" I didn't even know what it was. So
it's good to know there's hope.
Jimmy, like I mean, I want to share you a strategy that like you don't have to take it, and I think it's for beginners. It's great to just buy a single family up to 4, like duplex, triplex, or fourplex, because you get the best loan depending on your financial situation. And if you buy single family or any of these multifamily up to 4 units, you can always house hack it. You can always have roommates to help you with the mortgage and stuff like that. That's like the best way to do it. And you can just buy properties that you can borrow money with. That's how you can leverage, and you can get good rate. That'll be even better. Yeah, that's like
what
the
do you
starting
mean by
point.
borrow?
Huh?
Like
Borrow, like get a loan.
Yeah,
get a good primary residence. You can get even if you live there, you can get even a fourplex with primary residence rate, and that's going to be probably your best bang for the buck kind of thing. If you don't want to do house hacking, you just want 4 units, you live in 1 and you rent out 3. That's like the best way to start. Yeah.
Okay.
I think that's really good advice. And what he's saying basically is you have a 4 unit and the other 3 units are paying your mortgage pretty much. So you're living for free and you get the benefits of appreciation and tax write-offs. And I think it's a very good way to get started. But I also know where you live in Newport. It's mostly high-rise condos. You don't really have 2-family houses. And so I mean, you probably, you have to move. There's not
I'm
many
willing to look inside. I'm willing to look inside. Like I know a few people who have ended up doing it, not because they wanted to invest, but so this is in Harrison where my friend bought like a 2-family house, stayed in one, rented another, rented the one below, and then he had 2 kids. So like he needed to get like a bigger house just across the street. So he got another 2-family, and now like he has 3 units on rent and like lives in the 4th. And he says that works out for him. So I'm willing to go like inside. That sounds fine by me. I'm not like really married to getting something in Newport or like in walking distance. Like I can go deeper into New Jersey if it makes financial sense to do that, because I feel like I'll still be within reach.
That sounds great, because you really don't need like an expert after you search for your own house. You know the area like better than anybody else. But by the time you spend money and buy it, can you hear me? Hello.
I can hear you, Gene.
Oh, so
I think I can't hear you, Gene.
Oh, you can't? Okay. What I'm saying is that's a good approach. Just buy your own house, and you know the location better than, because you live there, better than anybody else. And yeah, you'll be your own manager. You save money. You fix anything that it's broken.
And you get experience.
Only one YouTube video away. Actually, that's great. If you have multi-units, next time we buy, lenders actually will ask, like, do you have any experience in property management? You actually need 2 years in order to get like a lower rate. I think it's actually beneficial.
Mm-hmm.
Yeah, for your next deal.
Okay.
That's a great start. Yeah.
Okay. Piggybacking off of that question, if you don't mind. So house hacking, I think in the San Francisco Bay Area, I see quite a few duplexes that are fixers. And so trying to get a gauge of how to what fixers are worth the effort to put into, like having never looked at this before.
A fixer that you can finance.
Yeah, fixers that you can finance, and also you want to just look at the comps in the surrounding area, how much you can buy the fixer for, and how much it would take to fix it up. So you want to have all these numbers in line and conservative before you invest. So assuming you know how to do comps, basically that values the property. You want to do it conservatively, finding similar comparable properties that have sold for a certain amount in the recent past, and that determines the value of the property. If you want, you can take into account things like you think the economy might drop and there'll be more houses on the market, therefore it warrants like a 5% or 10% discount or something like that. You know, you can apply your own assumptions based on your risk preference. You may not be able to find things as quickly if you're more conservative, but you're also going to be more protected if you do that. So after you determine the value of the property, you can see what price that you can get it at, and also determine what renovation items need to be done. So if you can take a walkthrough with either a contractor or investor friend who understands what kind of things need to be done, then they can give you a better estimate until you're more experienced and can make those estimates yourself. But going through with a contractor is pretty nice for just almost straight up having like a non-binding estimate quote.
Mm-hmm.
And then you can see how much it would take to fix up. You can apply that, add in the costs of financing, like or holding, for example, how much mortgage payments, tax interest, other types of items you might need to add in.
Mm-hmm.
And you can pretty much put that all in a spreadsheet and know whether you're going to make money beforehand. Like it shouldn't be a surprise. And then usually allow for like some measure of contingency, like a reserve in case things go wrong, because things will go wrong, and then you don't want the margin to be so skinny that, you know, if one thing goes wrong, you're done, because then you just spend a ton of time, a ton of effort, and a ton of risk only to lose money. That sucks. So better to do all the research beforehand and just be conservative.
Got it. And when you say have a contractor work with you or an investor friend, this is during a walkthrough of the unit, like assuming you've already like gotten a real estate agent to open it up for you.
Yeah. So I think maybe Gene would be a good person to answer this because he works with a ton of contractors, and he often, well, I know Gene can just estimate now too, but you know, prior to that, he was using contractors to make estimates from.
I see.
Yeah, if it's in the Bay, I have several teams that are doing different type of jobs right now. So yeah, and going back, you said a duplex. I don't know about anywhere else, but like in the Bay, I would suggest you buy single family instead of duplex. Yeah, you still there? Okay, yeah, because you can always, because when you talk about house hack, you might as well just buy like a single family for much cheaper price, and then just put a sheetrock, put a wall on, and just rent it out. You know, like, yeah. So that's it. I've been looking at duplexes, like even the crappiest area, it's like $1 million, and that makes no sense when you can buy a smaller home, but well, actually about the same size home, in a better area for like 800 or 700,000, and you can still do house hacking, and you still get the same rent. So that's, I mean, personally, that's what I'm doing. I'm not just like blowing something out of my butt kind of thing. So yeah.
And when you say like put up a wall, you mean like actually build a wall inside the house to separate the units?
Yeah, depending on where tolerance is, and these please disclaimer, this please check with your local guys. This may or may not be like legal. So, but anyway, with that said, yeah, you can do room shares, or you want to go all out. They have their own like private entry and stuff like that. The more amenities, you think of as a renter's mindset, right? I don't want to see anybody. I just want to walk into my room or my house and just close the door and be safe, feel safe. So if you're able to provide that type of service, it's really all service. And your rent will reflect on that, basically. Yeah.
Guys, thank you very much for joining our call. We have gone an hour and a half now. I think we've shared a lot of really great insights, and I've learned something today. Hope all of you have found this valuable. We're going to actually host a call on equities and stocks next week. If you have interest in that, please feel free to join. We'll be putting up a sign-up sheet, and also we'll be doing making the recording of this session available probably early next week. So thank you, everyone, and hope this was great for you.
Thank you.
Great. Thanks.
Thank you, Sam. Thank you, Ken, for hosting this.
Yep. Thanks, everyone.
Thanks, guys.
Take care,
Thank you,
guys.
John. Thank you, Eric. Bye, Chime.
Good
Bye.
seeing everyone.
Bye.